Ladies and gentlemen, welcome to Only Trade to Win. I do not know which way the market is going today or the next week, and I do not have any buy or sell recommendations for you. But what I do have is a methodology that took 25 years to put together, and the intent of this show is to share with you that knowledge so you can become a more profitable investor on your own. Biggest significance of last week in all the markets was not Nvidia, and it was not the Dow or the S&P or the NASDAQ. It was the Nikkei 225 that made its all-time high after 35 years. Yes, that's true. Japanese investors waited from 1989 to see their stock index average to reach new highs. And I hope this will evaporate the myth of averages for anybody who sees this, because it is so easy to make average numbers lie. So today's video is kind of out of order because we make videos on Tuesday and today is Monday. Again, today is Monday, February 26th. 3:30 a.m. New York time, and we had such a huge week and we have so much going on that I thought I just wanted to do a really quick overview of the market and the stocks going into Monday. And one of the things that is important to know is that today is a really dangerous day for new investors and traders, so I would definitely watch and not do anything today. Our first stop is Apple Computers. Berkshire Hathaway sold 10 million shares right here. There were 3 downgrades. And so if we look at Apple on the left side of the chart, we can see that this box represents the area that used to be a resistance area. So from here, if you can see right here, it sold off, then runs into this area, sells off again, then finally trades above, makes this all-time high. We're looking at December of last year. And then we have this drop with the downgrades. Boom, we come into this area. We call it 180 because it's roughly 180, 179 the area. Comes in here, rejects, runs all the way almost to the top, 196. Here is 199. It traded almost 200. So let's just take a look and see again. 199.62 on December 14th. And then on we go a little bit to the right, and on January 24th, the high is 196.38. And if I will try to do it right here, this, if you're new and you're looking at the screen up here where my cross is, this O is for the open price. So when you hover over different days, and right now we're looking at daily because here is my time frame. So each red or green bar represents 1 day. If we click it to the left, for age is 4 hours. So each bar now represents a 4-hour time period. And actually this looks really, you can see better. So let's leave it like this. We have tested this area 1, 2, 3, 4 times. The 4th time we could not rally, and this was a huge day on all the indexes. So Apple is relatively weak, and this was a market leader, and now a market leader becomes a lagger, or maybe it's leading the market, but this time to the downside. And we're looking that the price is coming into this area for the 5th time. And again, everybody wants Apple to hold this area, go back up, close above 200, and become a $500 stock in just a matter of a few months. But it doesn't look like it's going to happen, or it doesn't look like it's going to happen as fast as we'd like it to happen. And here what we do is we look, this is actually a very good area for entry for swing traders, because you have very good risk reward, it held this area. Or if it was me, I see that it tested 4 times, and every time it was from 1, it bounced to this area. From 3, it bounced lower. From 4, it couldn't bounce at all. Even though this is a great area, great risk reward, the way this stock is acting relative to a really strong market is weak. So I think it's only a good thing here to watch it and see if it holds this area. But if it holds this area, it's going to have a really nice run. And if it doesn't hold the area, we're going to that 165 area. And that's the price target for the analyst from Barclays, Tim Long, who downgraded the stock, the first downgrade of the year. And we'll see. So Apple is in a really good position. I would keep it on my A list and watch it closely. This is picture for Amazon.com. We're looking at the weekly. Up here you can see the W, so each of these red or green bars represents 1 week. It had a super nice run. It's up 110% from the lows 3 or the beginning of the year. That was the day, the beginning of actual big rally that we are still enjoying till right now. It became the S&P 500 stock last week, and we are still not making all-time high, which was set back in July of 2021. Phenomenal performance, looks really good, and there's nothing really on the way up. It's above all its resistance areas, and 183 is the next stop. See what it does. But now it's a market stock, and it's going to move more, or should move more, with the S&P 500. This is ARM Holdings that I am following really closely, and I added it to the list because this is like baby Nvidia. And it gapped up and is still staying above that price. In the case like this, what you want to do is come down to right here. This is the lowest price after the stock gapped up. I think it was a 20+% gap up on that day. So from here, we'll just measure into here. Yep, gapped up 23%. Then it traded all the way up to $163 a share, or 112% up, and it settled right here, sitting right here. So when it was down here, the first sell-offs, we said it was really, really good risk-reward area. And this stock is super volatile. This is our bottom range. So if it comes in again, test this 105 area, maybe it would be a good price. Maybe even up here, 116, 118 area. But in any case, we are watching this stock. It's on our watch list for the next year. And obviously, we are looking for it to continue in this direction. And we're looking for the stock to hold this area and make it upward in this direction. I'm back to the weekly, looking at the Dow Jones Industrial Average Index. This dashed line in purple is our previous all-time high. And since we set it 6% ago, or 2,000 points, we have not stopped running up. So super nice and super strong week for the Dow. Low 38,000, closing above 39,000. Closing about 39,000. In its all-time high territory. The same thing is for the S&P. Google, after making its all-time high a few weeks ago, pulled back just a little bit, but still sitting, holding this nicely developed weekly uptrend right here. It is a volatile stock for sure, but it is also really strong. So we're looking for it to challenge those all-time highs. And oh, by the way, we could get a pullback. We could get a big pullback on the market this week. And I'm going to jump to NASDAQ 100 real quick. Also closing near its all-time highs and trading into its all-time highs this week. There is one thing that I've noticed on Friday, and that's if you look at the daily, even though it was such a big update, we gapped up huge, and then we closed in the negative. Actually, NASDAQ closed down 65 points. Now, in order to see actually what happened, I'm going to go closer and look into hourly and just show you one thing here. The market opened up right here. We open at 1852. We make a high of 18,091, and that's in the first hour, and then we sell off. I'm going to go even closer so you can see better in here, and we'll go, let's do 15-minute chart. So here's our 9:30. Here is our opening, and all morning we sell off, then we have a reversal, and then again in the late afternoon we sell off, and we did not close on the lows, but we closed much closer to the lows than to the highs. And if we take our favorite measuring tool and measure it down, we can say that NASDAQ closed down 150 points. The high of that price that it set in the first 5 minutes of trading. So, we go on Monday and see if this continues. And after setting all-time highs again on Friday, we are up almost 30% since beginning of November. And now if we do get a pullback, then all the major stocks will come back with it. But let's continue with our list. JP Morgan, all-time highs, just doesn't stop. Meta sitting near its all-time highs. Microsoft pulled back just 10 points from its all-time highs. Russell was really, really surprising on Friday. It was the strongest index. Everything started selling off, and Russell just sat there, held its ground, and it finished both above the 2,000 mark, and it closed positive for the day, unlike the NASDAQ. And the S&P 500 index is also well above its previous all-time high. Here is from 4,800 to here. We are up more than 6% and 300 points since mid-January. Tesla didn't do much. It had a really nice bounce from these lows right here, but it did not extend the rally, so we'll watch it. It was down almost 3% on Friday, so Tesla is definitely showing relative weakness. Again, we have Tesla, Apple relatively weak, Nvidia strong, Microsoft, Meta strong. I think Monday will be a good day to see and watch what happens. See if we can continue with the pullback on NASDAQ of this Friday sell-off, profit-taking, whatever you call it, if it was enough. Because, historically speaking, in the past few months, every pullback is being bought up. But big day today. Be careful, navigate with care. Hope this little review was helpful, and I will see you tomorrow. Take care, everybody. Bye-bye.